This content is for educational and entertainment purposes only. It does not constitute investment advice.
What's up, Trading IQ community? It's time for some strategy investigation. And if you've made it to this video before any other video has been released, congratulations. This will be the first video in a long-running series where I dissect strategies across the internet, and I'll even code them if I have to. If you're not familiar with me, I'm a PineScript coder. I've coded tons of systems, tested tons of systems, and hopefully my insight can be helpful for you when deciding if a strategy is worthwhile or not. Because to be clear, most strategies aren't good and they don't work. And that's not the fault of the person designing the strategy. It's just common knowledge. Of all the strategies I've created, 99% of them don't work. So when we get one that actually looks pretty decent, then we should look into it. So that's what we'll be doing in this series. And for our first ever strategy test, we're going to take a look at an ICT model. Now, let me be completely honest with you. I don't know a lot about ICT. If I say something offensive, it's completely by accident. Now, there's an ICT model called the Silver Bullet Strategy, and it's the coolest sounding strategy I've ever heard. So when I first heard about it, I thought, we need to test this. The coolest looking strategy has to perform well, right? A strategy named pullback strategy for Bitcoin, there's no way that could ever work. It doesn't sound cool. Something like Silver Bullet, machine learning, liquidity shock events, this is the cool stuff. So we're going to test what sounds like a cool strategy and see if it actually gives us a decent historical performance. Now, it's impossible for us to run a definitive historical test on the Silver Bullet strategy. For this video, we'll take a look at the Silver Bullet performance on one asset on one time frame, and you can decide for yourself if it's worth investigating. Now, let's be honest, if you clicked on this video, you probably already know what the Silver Bullet strategy is. For anyone who doesn't know, let's go over the model very quickly so we at least have an idea of what this system is trying to achieve. Now, before we look at this trade, remember I mentioned I don't really know a lot about ICT concepts. If there's one thing I've learned about ICT concepts, it's when I search the internet for information, every website I go to tells me something different. Every website I go to has some minor variation of the Silver Bullet strategy, but the core heuristic and model is still intact. So I had to find someone who sounded like they knew what they were talking about. And I contacted a friend named Arvin, and he ensured me that I correctly coded the ICT Silver Bullet system. Now, one last thing. We're testing the Silver Bullet system in the ICT Master Suite indicator. This is a free open source indicator developed by Trading IQ. I coded it, and I crammed as much ICT related concepts into this indicator that I could without setting fire to the TradingView server room. So there's a ton of stuff in this indicator. Check it out, search it on TradingView. It's free, it's open source, and you can test a ton of ICT models. Now we're going to focus on Silver Bullet for this video, and we have a perfect Silver Bullet trade on the chart here. Now, the Silver Bullet relies on trading a fair value gap inside of a key session time zone. From what I've learned, the London Open and here the New York Open seem to be the most relevant time zones where this system is supposed to operate. Now, what needs to happen in this relevant time zone is price needs to go up or down. Pretty simple, right? But as price makes a move up or down in this time zone, a fair value gap needs to form. We won't go over what a fair value gap is. If you've been trading for 2 or 3 days, you've probably already learned about it. But what we're looking for with this fair value gap inside the time zone is an entry. So in this time zone, if a fair value gap forms during an upside displacement, an upside price move, we can say, we want price to pull back into the fair value gap, and that is our long entry. After we take this long entry, the market is supposed to increase at an unquantifiable velocity never before seen by man. This system doesn't only take long trades. If there is a downside move during this session time window and price pulls up, a fair value gap forms that's above price. If price pulls back up into the fair value gap, that would be a short condition. Now, thankfully, this system isn't so complex that the TradingView server room is up in smoke, but the conditions are nonetheless interesting. Now, regarding the exits for this system, everywhere I looked on the internet, there was a different way to exit this strategy. Now, of course, I have my ace in the hole, Arvin, and he told me we can use the previous day highs and lows or the most recent swing highs and lows as a trading exit for this system. So for Silver Bullet long strategies, the profit target can be set to either the previous day's high, recent swing high. The stop loss can be the previous day low or the most recent swing low. On the short side, the profit target can be the previous day low or the most recent swing low, and the stop loss can be the previous day high or the most recent swing high. I don't have any preference here. Previous day high and low seems more consistent as a target or a definition of risk than an arbitrarily chosen swing high or swing low. Of course, the previous day high or low can be any given distance from the current price, but at minimum, at least our baseline definition of risk is a little more consistent. Now, that's all it takes to get this model up and running. And just by looking at the chart here, where some of these recent trades occurred, there's some pretty juicy ones. It looks pretty good, but numbers don't lie. So we'll take a look at those now. And I have to say, I'm pleasantly surprised by this system's performance on Ethereum futures on the 5-minute chart. There's some very important exceptions, and we'll get to those in a moment. But before we discuss these numbers, of course I have to say, this is just a backtest, not financial advice. Backtests are not indicative of future results. This video is for education and entertainment purposes only and demonstration. We're just having some fun here. That's all. But when we look at this historical simulation, we have a max drawdown of 12%, a win rate of 64%, and best of all, and this is the strongest metric on the chart, a profit factor of 2.989, almost a 3. If you're not familiar with profit factor, generally a minimum of 1.3 in real trading is acceptable. Anything greater than 1.7 or 1.8, or even directly 1.7 or 1.8 is considered strong in real trading. Now, here's the exception. The total trades is 39. This is a low sample size. Ideally, we'd want to see 200, 300, 400 trades, even more, before we can start drawing inferences about the expectancy for this system. It's kind of difficult to take 40 trades and then project what will happen in 1 year, in 2 years, or form probabilities around what could happen over those periods of time. It's not really possible in most cases. Regardless, even with our 40 trades, ICT traders have something they can show off here, because over these 40 trades, 2.9 profit factor is exceptionally strong. Just to keep you a little bit in line though, a good system deployed in real trading is going to hover around 1.3 to 1.7 profit factor. So this 2.9 profit factor over the next 300 trades absolutely will not hold. It will fall. But that's okay. It's already over what we would expect for a real system. We just need some more trades. That said, equity curve for this simulation looks very good. If everyone's portfolio looked like this, I think we'd all be pretty happy with whatever system we're using or however we're trading. And if we look at the buy and hold performance of Ethereum, well, this system absolutely crushes it over the last year or so. But over this trading interval, Ethereum's down about 30%. So any system that is even marginally profitable or isn't losing as bad as Ethereum is beating the buy and hold. So there's a very low bar right now to create a system that beats Ethereum. Now let's scroll down and take a look at some of these performance metrics. Just to let you know, all these cool graphs and information here, this is totally new in TradingView. congratulations to them. They did great work because looking at this stuff makes me feel smart. Now, even with commissions paid, and commission is at 0.02%, which is a little optimistic if we used the taker commission for entries and exits. Now, this system is capable of capturing the maker fee because entries and exits are both on limit orders, except for stop losses, which are always going to operate with a taker fee. So lower commissions is one potential advantage for this system because entries and the profit target are known beforehand. And the main killer of any crypto system is commissions. So the fact commissions didn't kill this simulation's performance is a very good indication. And if we look at benchmarking, this just shows us how much we crushed that horrible buy and hold for Ethereum. This buy and hold makes any strategy look great. So don't be deceived. And there's a ton of other metrics here that you can look at in your own testing. Now, what should you take away from this video? We implemented the Silver Bullet strategy on Ethereum 5-minute chart, and even though we have a low sample size, the performance is not down and it's not red. So these are good indications. And in fact, there's some pretty strong performance metrics here, like the profit factor, but they're definitely overstated given the low sample size. Over 200 trades, etc., these metrics will decrease. It doesn't mean the system will fail, but these metrics will come down to earth. So if you're going to test this system, use as much data as possible and maybe configure the settings a bit to try to increase the total number of trades here. This is one huge drawback with this model is that the conditions are so strict with the narrow time range that takes place over 1 hour, and then the entry condition itself is a little bit strict when we need it to develop within that time range. It can be difficult to get a high sample size here, but I still encourage you to experiment. And again, if you're an ICT trader, I don't know why you're not using the ICT Master Suite yet. It's free, it's open source, it has everything. But that'll be it for this video. If you have a specific strategy you want to see me code and test, let me know in the comments below. And if you like the content, feel free to like the video and subscribe. But that'll be it. Thank you for watching. I will catch you in the next one.